I think it's going to be a really interesting week this week. I mean, the major news, there's not much in the way of major news this week compared to last week. Last week's big news event was the interest rate decision from the US Federal Reserve, the central bank. No surprises, no changes to rates, but they did say that clearly that the health crisis, the coronavirus pandemic, was still the major concern for the economy in the medium term. And we've seen further action, further cases in Europe. There's a worry about a lockdown again, some sort of lockdown here in the UK. So we are seeing at the start of the week, I think, slightly nervous markets. But I think this does make for a really interesting week ahead. When it comes to data, probably the most important data we've got this week is Eurozone PMI data on Wednesday morning. So it's often referred to as factory gate data. So it gives us an insight into how busy various industries are. So that could be a close one to watch. But I think for the rest of it, it's all about how markets react. So I thought, well, let's start off today with the S&P 500. So the broader US stock market, it's gone from those lows in March when, of course, lockdowns in Europe and everywhere else were starting. The lows back then around 2,200 pushed out to fresh all-time highs just at the beginning of the month. But in the last 3 weeks, we've seen US stock markets fall every week for 3 weeks, or on a week-by-week basis. We haven't seen this in US stock markets for nearly a year. So we've really seen a turnaround in short-term sentiment. But I think it's going to be really interesting whether we see the buyers come back in again to stock markets this week. You know, all the way up in this recovery, markets would sell off for a couple of days and then would bounce back. We've had a much deeper sell-off than that. So I would be watching stock markets, the US S&P in particular, to see if we see these buyers come back in. I think we will see it. We will see a bit of a recovery for stock markets this week, but at the start of the week, things are looking a little bit negative. It's drifted a bit lower in the overnight market. So I think we could have something of a volatile week for stock markets. I think the other interesting market to watch is the pound against the US dollar and the pound against other currencies. We do have increasing number of coronavirus cases here in the UK. There are concerns that more restrictions are going to come in place. We also have concerns over exactly what's happening regarding Brexit here in the UK, of course. And all of this has meant that for September, the pound against the dollar has gone from almost 135 to trade below 128. So it lost about 4% against the US dollar at the beginning of the month. And we've had this negative concerns out over the last couple of days about further lockdowns. But I wonder if we'll see something of a bounce back for the pound this week. And we do have that European PMI and manufacturing data out on Wednesday. So maybe Wednesday we could see a lot of volatility in the various currency markets. And I think the pound for me is a really obvious one to watch because it has been one of the more volatile currencies coming into this month. On the broader subject of currencies, I think we've talked about the dollar index in the past. This is the US dollar against a basket of different currencies like the euro, the pound, the Swiss franc, the yen, the Canadian dollar, a few other different currencies. And it tracks whether the US dollar is weak or strong. And since March, the US dollar has been really weak. You know, the market's dropped about 10%. We did have that interest rate statement last week. But I think what's interesting is, if we zoom in a little bit, is what's interesting, over the last week or so, we haven't seen the US dollar sell off. So even though the US Federal Reserve, the central bank, has said that it is going to keep rates low, we've seen the US dollar fairly well supported. So I do wonder if medium term, again, are we seeing a turnaround in sentiment towards the dollar, and perhaps we're going to recover some of those losses that it's made since March of this year. And this affects other markets, of course. If we take a look at gold had been an exciting market going into August. So we saw fresh all-time highs hit for gold in August, around about $2,075 an ounce for gold. So that the highest level it's ever been. So blasting through the old highs from, I think it was 2011. So 9-year plus highs for gold, all-time highs. Since then, it's been a bit boring. We've seen, you can see here, this is a daily. Each of these things represents a day's worth of trading, and it's been a little bit boring over the last couple of months or so. But I think if we did see further US dollar strength, we could see the gold price under some pressure. And the final market, I think, for this week is crude oil. So much of the movement in oil depends on what the economy is going to look like. You can see here, clearly you had a really strong recovery in oil off the April-May lows, but it's been fairly quiet during the summer. At the moment, at the time when we're talking about this, it's trading just above $40 a barrel, US West Texas crude. And I think with so much unknown about the economy in the next couple of months because of the coronavirus, we could just see more side to side for oil. So I'm not expecting any massive gains, any massive sell-offs for oil until we have a better idea of the economy. So for me, I think the interesting market to watch this week is going to be stock markets. I've got the S&P chart here, the US stock market index, and whether we see buyers come back and something of a recovery after this really tough start to September we've seen for US stock markets.